Hey, well, good morning, everybody. I just want to welcome everybody and thank the entire group, obviously the panelists and those watching today for joining us here this morning. For those of you who do not know me and we haven't had the chance to meet, my name is Tim Bataki, and I'm a Wilson Center trustee and chair of the Wilson Society. It is an absolute privilege to be here today and to be able to represent this wonderful institution. I hope very soon we can start meeting together to discuss these important topics such as today's and to continue to build a foundational relationship around the Wilson Center and our colleagues around the world. Throughout my career in Washington, D.C., I've had the opportunity to refer to the Wilson Center for trusted, nonpartisan analysis with the top experts in the United States and around the world. For more than 50 years, the Wilson Center has been among the most trusted resources in the policy arena. The center is grounded in its mission to provide nonpartisan and fact-based research. It is the bridge between the public and private sectors and called upon by presidential administrations, Congress, foreign policy leaders to add light, not heat, to the policy debate. Today's event is just one example of the center's convening power, bringing together experts across the private sector, academia, public service, and foreign policy. I'm also pleased to announce the launch of the Wilson Society. And for those of you who have just joined that, I want to say thank you for doing so, and we look forward to working with you on that. The Wilson Society is a support network of emerging leaders who are committed to promoting nonpartisan dialogue and pragmatic policy solutions. I hope you will join us in learning more about the Society and important work of the Wilson Center. I would like to now introduce Dr. Ben Gedan. Ben is the Deputy Director at the Wilson Center's Latin American Program and Director of its Argentina project. He is currently developing a Going Digital in Latin America, a 5-part series that will examine how Latin American governments can build on the transformation stemming from the region's post-pandemic recovery. His background includes serving as the South American Director for the White House's National Security Council, covering Central America and the Caribbean at the Treasury, and leading efforts on Honduras and Argentina for the State Department. He also serves as an adjunct professor at Johns Hopkins University. With that, I hope you thoroughly enjoyed today's discussion, and we hope you will spread the word to your colleagues about the Wilson Center, and we welcome all who would like to join for future events. Dr. Gedan, I turn the microphone over to you.
Excellent, Tim. Thank you so much for those introductory remarks, for the kind introduction, and for participating in this event and all your support for me and my colleagues at the Wilson Center. I want to thank all of you for being here today and welcome you to this exciting discussion and to this launch of the series that you just heard about from Tim. It's our Going Digital series. Today's event, of course, is Uruguay's technology sector and the future of fintech in Latin America. The series will be 5 parts in all, and it's co-sponsored by our great partners, the Information Technology Industry Council, the ITI. So thank you as well to my friends and colleagues at ITI. As Tim noted, my name is Benjamin Gedan. I'm the Deputy Director of our Latin American program here in Washington at the Wilson Center. Future events in this series will look at Latin America's privacy and cybersecurity policies. We'll also look at the future of digital trade in Latin America. Please stay tuned for more information about how you can participate in all of those activities. This has been, as you know, an immensely difficult economic period for Latin America across most, but not all, economic sectors. However, in this period, there's been one story that's been greatly encouraging, not only for helping individuals and businesses survive this turbulent moment, but also for a brighter future and a quicker economic recovery in Latin America. That, of course, is the explosion of financial technology, or fintech, which represents an immense economic opportunity throughout the Western Hemisphere. Now, Latin America has traditionally been a cash economy. Millions of savers have been reluctant or unable to access traditional banking services. And that's been changing, and changing fast. The pandemic has supercharged the digitalization of Latin America's financial sector, including, but not exclusively, for e-commerce and digital banking. Overall, since the appearance of COVID-19, regional cash usage has fallen by at least 12%, and more than 40 million Latin Americans have signed up for bank accounts. This is, of course, a global phenomenon. Worldwide, in the second quarter of this year alone, the financial technology sector attracted $34 billion in venture capital funding. In Latin America, the region we'll focus on today, the stunning digitalization has let individuals access emergency social welfare programs provided by governments, but also access to a range of basic banking services, including for low-income and rural individuals. These include loans for small and medium-sized enterprises, but also basic e-commerce transactions for families that before were unable or unwilling to use these technologies, but were forced to consider them due to social distancing measures and quarantine restrictions. Across the region in the private sector, Latin America's fintechs have been rapidly attracting new users and also capital, raising more than $1.1 billion in the first quarter of this year alone. But these technology companies, including the fintechs, do not simply materialize overnight, but rather public policy has shaped their growth and expansion and will determine whether this sector continues to expand even after social mobility and public restrictions on quarantines are lifted. That's why I'm thrilled to host today's discussion about how Uruguay has successfully promoted technology startups, including in financial technology, earning its nickname, the Silicon Valley of South America, and whether lessons from Uruguay's experience might be applicable for other governments in Latin America that have noted the digitalization trends and the opportunities it provides, and also see these as a potential solution to the increases in joblessness and poverty that they have suffered throughout the last year plus. Uruguay is home to more than 60 fintechs already. None is more emblematic of the country's successful innovation climate than the cross-border payment company dLocal. It was Uruguay's first unicorn, founded in 2016. It's now valued at reportedly more than $15 billion. dLocal operates in 29 countries, 13 of them in Latin America, including Argentina, Brazil, and Mexico. Its partners and clients include name brands such as Uber, Dropbox, TripAdvisor, and as of recently, Amazon. I'm joined by a fantastic panel of experts to discuss the secret to Uruguay's success, the remarkable dLocal story, and how other countries in Latin America could better support the growth and expansion of technology startups with all of the advantages that we've discussed for customers of these new businesses. Our guests include Uruguay's ambassador in Washington, Andres Duran, the dLocal founder and CEO, Sebastian Kanovich, and Jonathan Nelson, the founder and CEO of Hackers Founders. Ambassador Duran, I want to start with you if you'd be willing to offer insights into the ways that Uruguay has achieved its reputation in the technology startup world, why Uruguay is sometimes called the Silicon Valley of South America, what have been the public policies across governments and different political parties in Uruguay that have enabled companies like dLocal to establish themselves in Uruguay, thrive in Uruguay, and then overcome the size of the market to expand rapidly throughout the region and the world. Most of all, I want to thank you for your help organizing this event and for your generous participation. Ambassador Duran.
Good morning, Ben. Good morning, team. Thank you very much for the invitation or for organizing this event. Good morning to my fellow panelists, Sebastian and Jonathan, and to all the audience. Let me start with a few examples of what is going on right now in Uruguay. Right now, Uruguay is receiving its largest foreign direct investment ever made in its history, a $3 billion greenfield project with state-of-the-art technology. Right now, some of the most valuable U.S. companies and on earth, actually, the big tech companies are looking into Uruguay, exploring opportunities, some of them with a significant investment plan in mind, Google being the most notorious example. Right now, we have that the largest e-commerce platform of Latin America and other digital companies of the region, big players of the region, are operating and investing in Uruguay, like Mercado Libre and Globant. And actually, their founders and top executives are living in our country. Right now, the most important streaming companies in the world, like Netflix, like Amazon Studios, are all producing in Uruguay. They are filming dozens of films and series. And last but not least, we have the example of dLocal, a remarkable success story of a Uruguayan tech company that, as you said, it was valued at $1 billion a year ago, our first unicorn, and today has a market capitalization value of more than $15 billion. That's more than a quarter of Uruguay's GDP. It's really amazing, and I think Sebastian is the most valuable company of Uruguay at all. You can correct me that. But why all this is happening? Well, I think there are key general attributes that make Uruguay attractive, and some key attributes that are specifically related to the tech sector. On a general level, first of all, stability. Uruguay is a very stable country. It's a stable where investors can think long term because institutions work, the rule of law works, where there is political, macroeconomic, and social stability, and this is key. This is very important. It's a country, a reliable country that offers certainty. Secondly, it's a very business-friendly country. It's a country convenient to do business because there are no unreasonable regulations. Freedom is the general rule. You can send money in and out. There are several tax incentives and government support. There's no obligation to partner with local partners. So it's a very open and free system and convenient to do business. It's easy and simple. Also, Uruguay is a very enjoyable country. There's a fantastic quality of life in Uruguay. Benjamin, you have lived there. You're a witness of that, I guess. So it's a safe country, open, diverse, with great services, educated people, rich culture. So this is also a very important matter, more in a moment, in the moments that we are living, where remote working is becoming the norm, flexible working is becoming the norm. So it's a fantastic place to live and to be and to invest. And then, of course, we have some key attributes related to the tech sector. The tech sector is a fantastic story in Uruguay that has gained more visibility during the last maybe 5 years. But the truth is that Uruguay has invested in this area for decades. There has been a truly policy of state in this area by many different governments supporting this industry. So what would be the key attributes of our success here? I would mention 3: education, infrastructure, and ecosystem. We have heavily invested in our people, in our connectivity, and in a dynamic and coordinated ecosystem. In terms of education, as you all know, talent is the raw material of the tech companies, right? And Uruguay was, for instance, the first country to introduce a computer science degree in Latin America, shortly after MIT. Uruguay has full of milestones in terms of education policies. Uruguay introduced, for instance, the one laptop per child program many years ago, where every kid had access to a personal laptop and connectivity to internet. Uruguay has worked hard with public and private institutions to have a robust academic and educational offer in this sector for engineer careers, computer science, software development, data science, machine learning nowadays, and so on. So education has been key. We have exceptional talent, quality services, and at competitive prices, because you can have, I would say, the same quality of services than in the US, but the truth is that you can have them with lower prices. The second thing, very important for this activity, infrastructure, technological infrastructure. Uruguay has the best connectivity in Latin America, internet penetration, mobile penetration. We have invested a lot in our IT networks, data centers. We are now launching our 5G networks. So this is always has been also a policy of state, and it's always evolving, of course, and more news will come ahead. but it's another key aspect of our, let's say, success. And finally, I would say a very dynamic and strong ecosystem. Uruguay has for decades supported entrepreneurship and innovation. It has created institutions like the Uruguayan Tech Lab, more recently the Uruguayan Agency for Innovation and Investigation, that work along with the entrepreneurs, established companies, the academia, and the financial sector to have a well-oiled ecosystem to support innovation and the creation of new companies. And I would mention another factor, which is not a policy but a fact, and that factor is that we are a small market, and that means that on one hand, more or less everyone knows each other in the tech community, and that also helps for the dynamic ecosystem. And on the other hand, it makes our people to think outside of borders, to think big. And that's exactly what has happened with dLocal. And I don't want to get into the details of dLocal because we have the pleasure to have Sebastian and to hear his story. But in a nutshell, Ben, I would say those are the key aspects of our success.
Many thanks, Ambassador Duran. Sebastian, the ambassador makes a compelling case for Uruguay's investment climate. He tells us beyond the quality of life, which I can agree is lovely, the asado in the Rambla and life in Montevideo and Punta del Este. He mentions government-run incubators. He mentions a tight-knit community, a workforce that's talented but affordable. He mentions high connectivity, great education, predictability and policy, environment, all of that, seems clear for why, in addition to the fact that you're Uruguayan, that dLocal would have been founded and would grow in Uruguay. But obviously, a company like yours is mobile. You yourself have lived in Israel and studied there, which has its own vibrant technology sector. A company like yours could have, been founded anywhere and expanded anywhere. Yet you've remained in Uruguay, and as the ambassador has said, you've thrived there. My question is, what particularly about what you just heard from the ambassador resonates with you in the dLocal story and helped you succeed with the speed that you have?
Sure. Hi, everyone, and thanks very much for having me. It's a pleasure. Hi, Jonathan, Andres, Ben, Tim. Good seeing you. The dLocal story, it's definitely a Uruguayan story in the sense that we are all Uruguayan, so it doesn't get any more Uruguayan. I have my mother here, my mother right by the camera. And we started this company out of Uruguay. And I think the most important thing to say is that we never thought that would be a restriction. And I think that's a lot to say. People, when we started, thought that companies were going to be built from the San Francisco or even Tel Aviv, which is, yes, where it started. But no one thought that a company could come out of Uruguay and build scale. But we never had it in our minds. We were always thinking, okay, how do we deliver value to our customers? How do we make sure we are generally understanding their needs and building bridges? I think the fact that Uruguay is such a small country has clearly played to our strengths. dLocal means home court for those of you, and it's a sports joke. And we were always saying we are never playing home court, so let's make it dLocal because we started in Brazil. And the reality is that turned to be an advantage in the sense that we always understood that Uruguay wouldn't be our market, but Uruguay would be a great place where to start a company and be a launchpad. So all of our initial teams started in Uruguay, but we understood right away that Brazil was a place where from Uruguay we could be extremely successful. And having that ability of being multicultural and understanding what an American company needs, but at the same time understanding that reality in Brazil, but then moving to Mexico, moving to Argentina, moving to Chile, and only many years later, actually moving to Uruguay and finding customers there, has been a great ride. The dLocal story today, it's much wider than just LATAM. We do a lot in Africa, we do a lot in Asia. And having that idea of saying, look, we are never in our home country. We're always working in a place where we need to learn the culture. We are welcome everywhere, which is something that it's intangible, but it's super powerful. I've said everywhere I'm Uruguayan, and people typically say something nice. They like football, they like asado, so there's a good feeling about it. But on the more tangible side, we found amazing teams of people who are talented, who are humble, and who now feel and believe that they can conquer the world, hopefully. And I think that's probably the part where us as Uruguayans were mostly missing. We are, I think, much better than what we sometimes think we are. And it's remaining humble. It's extremely important to us as a culture, but then being able to deliver value to customers and doing so in a professional way, in a serious way. I think it's definitely something that can be built from anywhere, but we had the chance of building it from Uruguay, and hopefully many others will come afterwards. So that's our story in a nutshell.
Sebastian, looking at it from the policy perspective, the way the Uruguayan government has played a role, or at least not stood in the way of the development of countries like yours, I'm wondering if you've experienced any of those incentives that the ambassador referenced, if environment, consistency. The reason I ask is next door is a much larger market, as you've referenced, in Argentina, Brazil as well. In Argentina, we've seen a lot of the technology community consider moving to Montevideo. The founder of Mercado Libre moved famously from Buenos Aires to Montevideo, and it really shook up, I think, the technology community in Argentina that said, okay, we now are at risk of a brain drain next door. There must be something going on there from a policy perspective as well that has made it attractive.
So, Ben, I don't think this is a zero-sum game. I don't think that for Uruguay to do well, Argentina needs to do worst by any means. I think Argentina has an amazing talent community as well. They built some massive companies, and we have a lot to learn from them as well. What I can tell is that in Uruguay, we have clear rules, which have been in place from the moment we started. We don't even evaluate them changing. We consider them to be a given. We've been through a change in government, things transitioned. We went the day after, and our company was exactly the same, which I think it's a great attribute for anyone wanting to do business out of a given geography. And I know sometimes companies like us like to say that governments stay out of the way, but I think that's not realistic. Governments are sometimes responsible for education, they're responsible for health care, they're responsible for the fact that we can walk on the streets, and that's something I don't take for granted. So I think we owe a lot to many people. Coming from where we come from, it's obviously also clear that we all went to school in Montevideo or in Paysandú or in Punta del Este, and we shouldn't forget that. I'm a believer that private companies can move the country forward, and it's the role of the hopefully state to allow for that to happen. And Uruguay, it's definitely been a place where that has happened for us.
I want to bring in your perspective, Jonathan. You work with startups throughout the Western Hemisphere, and I think you understand very intimately the obstacles that they face to acquiring enough capital, to growing, to workforce challenges that have been referenced. You know, the goals that the ambassador laid out are pretty common in the region. I think most of the governments say they want to move away from a dependence on commodity exports. They want to build technology sectors. They all want to have their own unicorns, and they all brag when they are able to incubate one. And yet, not all the countries have had success at this level, and will not have individuals like Sebastian singing their praises the way you've just heard about Uruguay. So two questions for you is why has this success been difficult to replicate? And what, from what you've just heard from Ambassador Duran and from Sebastian, resonates with you and might be easy to recreate in some of the other big markets in Latin America?
No, absolutely. Thank you very much. And Sebastian, congratulations on your IPO. And, Ambassador, thank you very much for all the service that you guys have been doing to the ecosystem in Uruguay. I'm here based in Silicon Valley. I grew up in Latin America. And so we do a lot of kind of cross-border business. And there's been a number of times that we've actually hosted groups in Silicon Valley from the government of Uruguay, who's essentially bringing young entrepreneurs to the region to try to do business here. And one of the things that I think that Uruguay has done very, very well, I think that the stability, absolutely. I think the IT infrastructure, you have to have broadband to be able to build a technology company. Absolutely. I think the quality of engineering education in Uruguay is some of the best in Latin America. But I also think what Uruguay has probably done better than most of the countries is that they've actually always seen themselves as an exporter of technology. I believe that, for years, and correct me if I'm wrong, but if your taxes were higher as a technology company, if you sold to Uruguayans from Uruguay, and if you actually sold it to outside, that it was, much lower tax rate. And so the policies were always geared towards think global, think of this as your home base, but also think about exporting. And they've actively tried to build a network and try to do cross-pollination across different ecosystems. When I look at other ecosystems like Startup Chile, like Guadalajara, in and around Medellin, Colombia, one of the challenges that Chilean startups have is kind of just getting out of Chile and helping them time to expand. And if you talk to some of the angel investment groups and some of the venture capitalists, that in terms of helping companies become regional, multilatinas, is a big challenge. And I still think that, if you look at Latin America as one market, it's about 8 to 12% of the world's GDP, depending on, if you want to include Brazil or not, and depending on exchange rates. It's only 30% smaller than the Chinese market. But it's been tremendously undercapitalized for years. And why is that? One of the issues is that our capital markets infrastructure, our stock exchanges aren't nearly as robust as they are in the United States. I mean, Sebastián and dLocal have actually IPO'd in, the US. Why is that? Why weren't we able to help them IPO on the MILA stock exchanges of Latin America, the Colombian, the Uruguayan, the Peruvian, and the Mexican exchanges? I think that there's a lot of work there to become have much more regional economic integration. But at the same time, the economic fracturing of different countries has actually allowed companies like Sebastián to build financial services infrastructure that's really a cross-border payments firm. And that is a challenge in the region, but it's also a very large business opportunity. And so, there's a ton of some of the most exciting fintech innovations that I'm coming across worldwide are in Latin America. Why? Because Latin America being such a huge market, it's still only 40 or 50% banked. That means about half of the population of Latin America, about 400 million people, need bank accounts. The IFC and World Bank says that there's a $5.4 trillion per year funding gap for SMEs. I don't have the exact data for Latin America, but I know for a fact that a huge amount of small and medium enterprises in Latin America don't have banking services or don't have financial services or access to credit and access to capital that other markets like in Europe or the United States would. That's both a regional challenge and also a tremendous opportunity for fintechs. You're seeing some of the fintechs in Latin America become some of the most valued fintechs in the world. Nubank out of Brazil, built by a Colombian entrepreneur, is the highest valued neobank in the world right now. They're innovating faster and building a better product than some of the even European neobanks are. Why is that? Well, because there's a hole in the market and they're able to tap it. Once they get connected to those capital inflows, these entrepreneurs from Latin America can scale aggressively across the entire region, and they have very little competition. So I'm very, very bullish on fintech in Latin America, and I'm actually extremely excited to help support that and to help these companies access capital markets and be bridges between these markets.
Ambassador Duran, I want to continue with the line of questions about access to capital that Jonathan has referenced. It seems to be a reasonably important part of your job in the United States. I know you've been traveling extensively to try to make sure that Uruguayan companies like dLocal, but obviously much smaller firms, are on the radar. Sebastián, I think, rightly points out that Uruguay has a nice reputation globally. When you meet people, they are excited to talk to an Uruguayan. Argentina, I can point out, is not the only country to defeat Brazil in a final in Rio. But obviously Uruguay did as well in 1950 in the World Cup. And yet, that it is a small market, as everyone has noted, and wouldn't be an obvious choice for someone who's not very aware of the subtleties that Jonathan has described of the various markets in Latin America. So my question, Ambassador, is what are the efforts that you and your colleagues in the Uruguayan government make to make sure that there is enough access to capital for startups in Uruguay to get to the scale where they can start to think about an IPO internationally?
Sorry, I was on mute. Yeah, sure, Ben. Well, now that we met Jonathan, we can hire Jonathan to to help in that process, no?
Good idea.
And,
happy to bring you together.
But absolutely, I mean, I would say that the risk capital part of our ecosystem has been by far the weaker one in Uruguay. Although that is changing because the world has become more global, and today it's not absolutely necessary to be in Silicon Valley or whatever to access capital, and the examples of the local are very inspiring and help us and help the other startups to have more connections and to access capital around the world without the need to be in other places. It's true that there's a gap there. There's a need, but that's the Jonathans of the world can help to bridge the gap, and also, of course, this is part of my job to try to connect people, startups to the financial community, and to help them to raise capital and to connect with the investment funds that there are out there. Also, Ben, I haven't mentioned, but also there are some venture capital firms that are being very active in Uruguay right now. Also, some top executives of those firms are living in Uruguay right now. So my point is that we are making progress on this.
I want to let our audience know that you're more than welcome and encouraged to participate in the conversation as well. You can send questions that you have for the ambassador, for Sebastian, for Jonathan, to us on Twitter. It can be a direct message, or you can tag us. Our Twitter handle is @LATAMPROG, at LATAMPROG. And you can also send us an email, lap@wilsoncenter.org. So please do feel free to participate in this conversation as well. Sebastian, I want to focus us particularly on fintech, on financial technologies, which, as I referenced earlier, have been an area of really remarkable expansion worldwide and in Latin America, including for acquiring capital needed to meet these growing demands. The fintech story is not just a story of a financial opportunity, but as I referenced in introductory remarks, a really human need right now, and one that we've had for a while in Latin America that finally is being met. I just want to hear from you about what financial technologies and dLocal means to Latin Americans, particularly those that have had virtually no access to what we take for granted in terms of basic banking services in the United States and Europe and other places where these technologies are growing as well, but maybe weren't as essential as they are in the emerging markets where dLocal thrives.
Sure. So first, just to frame the discussion, dLocal is a B2B company in the sense that our customers are global companies who want to transact with users that are sitting in emerging markets, also particularly in Latin America. And the way we define ourselves is that we are building infrastructure. So we are building the bridges for those users who want to buy from a global company to be able to do so, but also to the driver, to the freelancer who wants to get paid to be able to do so, or for a company who want to issue a credit card or a debit card to a user in one of these markets to be able to do so. Every time we discuss infrastructure, I always say the same. We are not responsible for what happens on top of that infrastructure. And I want to be very clear about that, in the sense that good things are happening because other companies are building amazing use cases. But we do believe we have a role to play in building those pipes. Historically, if you're an American company and you want to reach a user that is sitting in New York, there's no friction. You have places where to go, you can collect from a credit card, you can pay out to a bank account, and there's no friction whatsoever in that process. If that same user, instead of sitting in New York, is sitting in Sao Paulo or in Buenos Aires or in Mexico, there's many things that are broken and need to happen for that transaction to be able to occur. And that's what dLocal does. We take all of those small parts that are broken, are not connected with each other, and we have a technology infrastructure on top of it. So we make sure that when Amazon wants to speak with this user in Brazil or wants to help this seller in Chile to collect or disperse funds, there's a way to do it. Are we Amazon? No. Are we the seller? Absolutely no. We are hopefully building the infrastructure for those two transactions to happen. And I think there's huge space in Latin America in particular for infrastructure plays. Yes, there are many efforts trying to bring users who don't have a bank account. And I think those are extremely valuable, and they are for sure a force for good. There's companies trying to allow people to access credit, which is a whole challenge. There's wallets coming up. There's governments coming up with huge innovations like Pix did in Brazil or Spay did in Mexico or India with their UPI. So I think there's all this innovation happening. And my view is that when you build infrastructure, good things happen on top. One of the things I like the most about what we do at dLocal is that we launch a product, and then the use cases that we end up powering are very different from the ones we were thinking of the day we've launched. And that's super exciting because it means that, number one, the potential is huge, but also that people, when you give them the tools, can be really creative. So that's our take on this challenge.
Sebastian, I just want to ask about consumer behavior in the markets you're operating. We've seen major changes over the last year and a half by necessity. And there's a question about how permanent these changes are and the new consumers who feel comfortable in digital technologies who didn't before. What have you seen, or your clients have seen over the last year that you regard as a real dramatic and permanent shift that will be meaningful for financial technologies in the future?
So at dLocal, we've always taken a very agnostic approach in the sense that we don't want to be educating the market. We think access to financial services should be as inclusive as possible. We still have users paying with a cash method. It's called Habita and Redpagos in Uruguay. It's called Boleto in Brazil. It's called Oxxo in Mexico. Are those my preferred payment methods? By any means. I would like things that are more online and work better. But I do understand that if we want everyone to have access, we need to take that seriously. And we're not just offering the payment methods we would like ourselves or the ones I would use. There's been innovation. There's more and more people willing to buy online. There's more access to credit cards, to debit cards, to wallets. I think what the Brazilian government has done with Pix, it's hugely powerful in the sense that now essentially anyone with an ID has a bank account linked to the financial system. You can send money from one place to the other for free. So those innovations are massive. But I also believe that companies and our role as well is to make sure that no one is being left behind. So there's always going to be users who want to go pay cash and have a payment slip, and we'll need to give them the opportunity to do so. Is it our preferred payment method? Obviously not. We are betting on other things to pick up. But in the meantime, we need to make sure that these users are still included.
Jonathan, before I get to you, I want to remind all of our listeners and our audience that, again, you can join the conversation. Please continue to send in your questions and comments on Twitter, either a direct message or you can tag us. We're at LATAMPROG, at LATAMPROG. Also, just send me an email at lap@wilsoncenter.org. Jonathan, I want to return the conversation to where it started, which is the policy question and the role of governments in making sure that they can take advantage of the digitization. They can make sure that companies continue to grow and expand in fintech and other sectors. One of the areas that we haven't mentioned explicitly, but we've talked about, the importance of broadband, is the digital divide in the region. And there's a reason why Sebastian still finds communities that want to pay in cash. And it isn't just that they're old fashioned or individuals who are scared of technology. There are real questions of connectivity still throughout Latin America. Just on the ground, the companies that you work with who face that challenge, how much of an obstacle has it been? And what do governments need to do to make sure that the dLocal story becomes a common one?
So most of the technology entrepreneurs that I come across end up operating out of urban centers. And so the urban centers in most of Latin America are fairly well covered with broadband and mobile services. I think that you're actually starting to see a little bit of a leapfrogging, and as more wireless technologies, as 5G takes a hold, 4G technologies becomes kind of permanent, I think that will become less and less of an issue. But still dedicated high-speed broadband access. I think one of the reasons that Uruguay has some of the highest transmission lines, is you actually have a couple of fiber optic cables coming from Africa through Uruguay to South America. The cables going up to New York go through Uruguay around the other side. But there's really only, I think, 3, maybe 4 kind of fiber optic broadband pipes that actually service most of Latin America. And if I'm not mistaken, 2 or 3 of those actually connect in Uruguay. And so that kind of infrastructure is something that governments can very much be a part of and support. I think the upcoming over the next decade, you're going to see a lot more satellite broadband. And so I think in emerging markets, you're going to have, SpaceX is building companies that are doing that. Amazon is actually building broadband infrastructure companies that are space-based that are going to be much lower latency. I think that's going to be less of an issue. But right now, in terms of broadband access, the vast majority of people in Latin America are going to access computers and access the internet through a cell phone. You have more smartphones in Latin America than you have individuals. But still only half of the people are banked. This is why I think you're seeing a bunch of financial services being built on a mobile first basis that are actually attacking these problems and solving these problems.
Ambassador Duran, we have a question from Nicolas Salias from the Economist Intelligence Unit. He reminds us that Uruguay had a change in administration recently, a change in political party for the first time in more than a decade. Now, you and Sebastian have emphasized the consistency of policy in Uruguay as a huge advantage. Sebastian said he takes it for granted that the rules of the game will be the same. There's no thought given. Yet new administrations tend to come in with new ideas, new incentives. What has been the particular approach of the new administration in Uruguay when it comes to the technology sector and continuing its expansion and continuing to think of creative incentives?
Well, we are working hard to attract more talent to our country, to attract more entrepreneurs. We are enacting policies for that. We are working hard to improve our digitalization of our government and the economy in general. We are working hard to attract big tech investments. I think those are consistent aspects with previous administrations in general terms, but maybe we are putting more focus on our digital and tech ecosystem because we see a lot of opportunity here. We expect to have many more dLocals in the near future, and we are betting on it.
Excellent. Thank you, Ambassador. Sebastian, the idea that you were, the first unicorn from Uruguay, and yet the ambassador, is hoping for many more dLocal stories. My question is sort of the ambitions that you see in the tech community in Uruguay. All of you have emphasized the idea that you're forced to think about overseas expansion when the market is too small. And you've mentioned, Sebastian, that dLocal looked to Brazil even before entering the Uruguayan market. Do you get a sense that the story of dLocal has inspired other technology startups or that there's enough ambition in Uruguay that people really think it's possible to one day have an IPO in New York and to become a global company, or at least a multi-Latina, as Jonathan has referenced?
So, Benjamin, we were always working on doing the best we could. We weren't expecting to be an inspiration to anyone, and that's also an important thing to say. We were trying to do our best, and we were trying to survive in the beginning. We weren't thinking, how are we going to become inspiration for many others? We're trying to keep our head above the water. So I think there's plenty of ambitious people, plenty of talented people. I do spend a lot of time in Tel Aviv, and we've done our IPO, but in Tel Aviv we've had 10 in the first half of the year, and I see friends that are working for the next company that is flying to New York and coming back with an IPO. I generally see there's space for the same to happen in Uruguay. I see a lot of parallels, small countries, no local market to speak for. So always this company thinking of internationally, and hopefully will help others see that it's possible. If we do that for one company, I would be extremely proud. I wouldn't be able to be more proud than that. But I also think the best way for that to happen is if we execute, if we keep our heads down, if we continue to deliver in the things we need to. I think the moment companies think of themselves as a reference, sometimes we become less hungry and less ambitious, and we lose what got us here. So we are definitely spending much more time saying, okay, how do we expand into more geographies? How do we add more value to our customers? And hopefully there are going to be many other Uruguayan companies that are going to be able to use part of our story to get the trust of an investor, to get the trust of a customer. And again, I couldn't be more proud if that's the case.
Jonathan, we have a question from Kezia McKegg from McClarty Associates, who's interested in policy questions in Uruguay, but I'd ask you to broaden it. When it comes to challenges, opportunities for credit card companies, government policies on payments in general. Again, this is a fintech discussion, and I think we can't take for granted that the expansion we've seen over the last year and a half inevitably will continue, particularly when the need for it arguably declines somewhat after social distancing measures are inevitably lifted. So maybe talk about policies toward credit card companies, objectives and challenges in terms of payments broadly in the region, and also why they work in the Uruguayan context.
And so 4 years ago, I was on a panel on fintech with the head of payments for Microsoft, Google, and Facebook. And they said that 40 to 50% of their time was dealing with cross-border payments in Latin America. And they were in charge of global. And so the cross-border payments issue is huge. And this is, I think, why dLocal has been so successful. And I think that you're going to see an entire generation of new companies being built on top of that infrastructure. In terms of access to credit, in terms of credit card penetration rate, you have a number of different challenges. One is that fraud for credit card and digital payments in Latin America is actually quite high. I believe the last data that I read was like 6% of credit card transactions in Latin America are potentially fraudulent, whereas in the United States, you're looking at like 0.4 to 0.5%. And so the lack of kind of protections, the lack of law enforcement against credit card fraud and those sorts of schemes is actually very difficult, very challenging. I think that that's something that the governments could actually step into and solve. And then Latin Americans tend to pay some of the highest interest rates on credit cards in the world. You're looking at some APRs of like 80 to 90% can be normal in some of these markets. High or high risk credit card rates can be like 150%. Some fintechs are charging up to 200 to 300%, but that's a huge step up from your other option, which is if you're a cash-based person, your only option to get access to credit is through basically a loan shark. And so some of these informal kind of lenders can charge up to 4,000 to 5,000% APR. So when you think of financial inclusion, when you think of access to capital, when you think of that, how do we as governments, how do we actually start thinking about lowering interest rates, mandating interest rates, and making it more profitable for these companies to actually be able to operate with lower interest rates? I think that's a combination of law enforcement. I think that's a combination of, putting the rule of law in terms of that. And I think that's also a function of, stable currencies and stable economies. If my currency is fluctuating 20 to 40% a year, what credit card company is going to want to lend to individuals in that country at less than 40 to 80% per year? So those are things that tend to snowball. So on a policy level, I would argue the law enforcement piece in terms of credit fraud. I would argue that, how do we mandate lower insurance rates if that's actually a thing, or putting a cap on, maybe usury laws need to be more enforced. And then just competition. You need more lenders in this market so that they compete on price. Right now, you have a lot of, very small number of financial services firms are basically serving the wealthiest clients in Latin America. And we just need more, better competitors. And that's the core of fintech.
I just want to remind our listeners, you have a few more minutes if you wanted to ask a question as well. Again, you can reach out on Twitter at LATAMPROG, the direct message. You can tag us. You can send me an email, lap@wilsoncenter.org, LAP@wilsoncenter.org. Ambassador Duran, The political risk issue is one that you've sort of referenced in passing, talking about the consistency of policies in Uruguay, the general stability, and we've talked about the quality of life, the peacefulness. Sebastian said he doesn't take it for granted, that the schools are excellent. You can walk safely around. These are services inevitably and provided by governments. Latin America in general, that's not the reputation of the region right now. It's quite tumultuous in a political standpoint. You're seeing major policy changes and elections throughout the region. Incumbents are often very unpopular, raising the possibility of very new political ideas emerging. When you actually talk to some of the big companies that you referenced that have been coming to Uruguay, do they explicitly tell you that that is a big part of their calculation in choosing to operate in Uruguay? How important is the political risk question beyond some of the more nuanced issues that we've discussed when it comes to technology and fintech?
Yeah, well, that's kind of tricky question. But indeed, I like to speak about Uruguay and Uruguay's strength. And no doubt that the stability of our country and the ability to work in peace is key. Is key for the foreign investors. And as Jonathan said, the market, if we see Latin America as a whole market, is huge. So one of our main advantages is to be the place of election of the companies to have a hub for the region, a hub for Latin America, to set up shop in Uruguay and from there expand as they see fit into Latin America. We strongly believe we are a great country to start operations in Latin America.
We have just a few minutes left and we have 3 important questions that have come. So I'm going to list them at once, 2 for you, Sebastian, 1 for you, Jonathan, and then Ambassador, you'll have an opportunity if you want to add anything before we close. The question for you, Sebastian, one comes from David Smith, who works in the Southern Cone as a correspondent for The Economist. He asks, what has surprised you most about the Latin American market? What has disappointed you about operating? Obviously, Latin America is not the only place where you are. I think we said it was 13 of the 29 markets that dLocal operates in. And a question from Arturo Porzakansky from American University. It refers to the burdensome labor laws and strong unions in Uruguay. To what extent would more technology jobs and larger companies be created if there was a flexibilization of the labor regime in Uruguay? Before you answer, I'll just give Jonathan your question so you can prepare. The question from Jorge Roldos from the IMF is about cybersecurity. What keeps you up at night? Are the cybersecurity risks prominent? How do you manage and protect against those? And for that, we'll think region-wide and how big an issue that is. You've referenced the high levels of fraud earlier. We'll talk about cybersecurity then as well. Sebastian.
Surprises and disappointments. First of all, there's no such thing as Latin America. There's multiple countries, each one of them behaves very differently. And for many people, that's a surprise. When you speak to some of the, we serve a lot of Chinese companies, European companies, and US companies who want to come into LATAM. And sometimes the first thing we need to explain is there's no such thing as LATAM. You need to think, is it Brazil, is it Colombia, is it Chile, is it Peru? Where are we going after? I think it's tough for us to say disappointment because we knew what we were getting into. I think we still live in an area of the world which is challenging, where things are not perfect, and there's plenty of opportunity to solve for those. I always speak to one of my partners, and every time we go to a new market, when we fly back, we say, wow, this is super challenging. And the fact that it's challenging means that there's an opportunity and there's something to see solved. And the biggest surprise, which is definitely a surprise, it's the interest that the global investor has gained in Latin America and the global merchants. When we first launched, we spoke to the global companies and they were telling us, I want to have a strategy around Mexico. Or some of them were thinking about Brazil. And that was it. Today, global companies understand, particularly US and Chinese companies understand that their growth, it's not going to come for Chinese companies from the US. It's not going to come from US companies from China. It's going to come from emerging markets. And what's a very obvious emerging market? It's clearly Latin America. So that's something that it's new. That wasn't the case when we started. And that has been a huge surprise and definitely a positive thing we've seen. companies now understand that there are challenges, but those challenges can be overcome. And once you do, the price on the other side, it's huge. And we've seen that again and again. And on the labor law side, today dLocal has people working across probably every country in Latin America. We do see different frameworks. I do believe tech jobs are typically easier from our labor relationships perspective. Because it's a job of quality, which allows people to be creative and give people a lot of dignity, which is hopefully what we all expect. It hasn't been a challenge for us. I do recognize that there might be other industries that are more affected by this type of laws. We've always wanted to make sure that our business was sustainable and healthy across multiple geographies, and we could find talent wherever talent is. And that's an extremely important point, and I think something governments will need to understand. Opportunity will be everywhere. And there's talented people coming from literally everywhere. Talented people are not anymore only in San Francisco or only in London. There's people sitting in Paysandú in Uruguay, which is where my family comes from, who are extremely talented and have the chance to be as good as anyone else in the world. So governments will need to understand that those talented people are competing globally, and we need to give them the frameworks everywhere for them to be happy and have a way of doing their works. So that has been our experience.
Jonathan, in just 2 minutes, if you could address the cybersecurity concern region-wide and what that means for the companies you work with.
And so I think cybersecurity, I think kind of, especially in the fintech space, I think it's fraud. It's, people opening up fraudulent accounts. It's people, using credit in illicit ways. It's saying, hey, I ordered something and then asking for a chargeback. That whole infrastructure in Latin America has got to get sorted if we're going to have much more of a broad-based digital economy. What keeps me up at night is the physical security of my employees in Latin America. When they're actually talking to me about, I'm terrified because there's protests and people are getting shot. They're not very productive when that happens. And another thing on the cybersecurity front that keeps me up at night is, and I think this is Silicon Valley's to blame on this, is the polarization of our social media. And the way that we cluster together people of similar political opinions who can sometimes have very extremist views, I think builds echo chambers. I think that we've seen that in the United States. I think that we're seeing that in a lot of markets around the globe. And I think that's something that we've got to actually get sorted. And I think that's going to be a Silicon Valley, Europe, EU kind of thing that, the heavy hammers of regulation are going to have to come down on that one to kind of solve those problems.
We just have about 3 minutes left, but Ambassador, I wanted to make sure you had an opportunity if you had anything more to add before we close.
Just Ben, well, thank you very much for the event. Really interesting. So we have a dynamic tech environment in Uruguay that has been built over decades, but we want and welcome more capital and people to contribute to our ecosystem. So we invite everyone to test Uruguay. That is a fantastic place. Thank you very much, and a pleasure to share this event with Sebastian and Jonathan and all the Wilson Center team.
Likewise, and thank you, Jonathan. Thank you, Ambassador Duran. Thank you, Sebastian. Thank you, Tim. This was a fantastic discussion. This is why we're doing this Going Digital series. The whole idea is to identify success stories in the region and the policies behind them to make sure that Latin America, again, can take advantage of digitization with all the benefits for Latin Americans, for those excluded from financial systems and other parts of life that technology can facilitate. We'll be talking about a range of these issues as we go forward, all in partnership with the Information Technology Industry Council, ITI, our great partners in this initiative. Stay in touch. We will reach out soon. We're sorry we didn't get to all your questions, but I will be sending out information with my colleagues on future events in this series, including an event that takes place tomorrow, where we'll be discussing the workforce challenges. They've been referenced a few times here, and I'm glad we did that. We're going to dig much deeper into the question of whether the newest challenge for Latin America, as Latin America becomes more connected, is whether there are workers to actually staff these companies. and whether companies like dLocal and others can find the software engineers and other experts they need to be able to fill the positions and to be able to keep up with the really explosive demand. So stay tuned. Tomorrow we'll have more information about that event. Again, thank you everyone for participating. Thank you, Andres, Sebastian, Jonathan. This was wonderful. Thank you, Tim. Please join us again soon. I appreciate your support for the Wilson Center.